Alrighty, so my name is Andrei Knight. This is Fibonacci Fridays. Hope you guys are doing well. Hope you've had a great week trading. Great month trading for that matter. We're turning a page on a new one today. And if not, if your results aren't quite what they could be, if there's room for improvement, well, hopefully some of the ideas I'm going to share with you today can help make that happen going forward. Cool, Pavlin. Maybe if there's time permitting, we'll take a look at that next. I'm looking at gold right now, you guys, because it's been in the news a lot. Not surprisingly, it's been tumbling. Quite a few people made a big deal that it opened below the monthly 21 moving average today, the new monthly candle. I think there's a level that's even more important to watch as far as determining what's going to come next, if it's going to tumble further or if this is the end. I'll share that with you, but more importantly, I'll share how I arrived at this level. So you can go and repeat it on your favorite trading instruments and currency pairs. I'm using gold, by the way, because it's a trade that I just closed. I like to use real-life examples, not just theory in here. But everything you're learning, you can apply to stocks, you can apply to other commodities, Forex. These strategies were developed on Forex, actually. But they are universal enough that you can use them on all instruments. Because I don't like to change strategies when I change charts, personally. I worked really hard to find something that worked wherever I applied it. Ahmed, Euro USD. Here again, time permitting, we'll take a look. Personally, I think right now, sideways. Nobody's going to budge, I think, on any of the dollar crosses till we see the full effect of this sequester that's going into effect at midnight tonight. I think people are waiting to see how markets react Monday morning. You know, we got a monthly candle, but I think everybody's waiting for a new weekly, daily candle. But I'll share what to look for come Monday. Not at all, Ahmed. That's the cool thing about trading it through a Forex broker. Now, bullion, you need a little bit of cash, yeah. Sure, I personally recommend a little bit of both. There's nothing like the security of physical gold, but as far as trading the movements in gold, you can do just fine with a reasonable account. Max stop loss, Pan, it really depends on the situation. My rule for stop losses is I like to put my stop on the other side of two or support or resistance levels for my entry. This can be a moving average, a pivot, a fib, prior high or low, some combination. But two or more support resistance levels kind of as a boundary between my entry and my stop. So sometimes it ends up being wide, sometimes it ends up being really tight, but without any added risk. It's always appropriate to the situation. And then a little tip there, Pan, don't put your stop, once you figure out a good place for your stop, never put your stop right on the line. Stop hunting is real, and if a level is obvious to you, it's probably obvious to somebody else. Okay? So always go a little bit wider beyond the point that you pick. And 40 pips? Well, it depends. 40 pips would be huge for a scalper scalping on the 5-minute chart. That would be too big. Might be too little for somebody trading on the daily, weekly chart. You know what I mean? It can't be a fixed arbitrary number. It's got to be appropriate to the situation. Sometimes that means more, sometimes it means a little less. Alrighty, so let's take a look at gold. Down, down, down she goes. Suddenly, all of a sudden, in the middle of nowhere, it has a bounce up. or maybe not in the middle of nowhere. Let me show you guys how I use Fibs. I'm going to run through this really quickly for the benefit of those that maybe haven't seen this before. A lot of people get scared when you mention Fibs. You shouldn't be, you guys. It's not scary. Not a bunch of complicated math. Okay, if you can count to 4, I'll show you how to use Fibs. There we go. That's why it's not showing up. And let's make it a little bigger. Okay. So, point A. You guys, this is where the trend began, where this thing first started dropping. And I'm going to take it down to the first major prolonged reversal. How do you know which one to use, you guys? Lean back in your chair, squint your eyes a little bit, first thing that pops up off the chart. We were dropping, then we were interrupted, then we dropped some more. Okay? So wherever this first thrust came to an end, I'm going to call that point B. Look at this. We're halfway done. Told you 4 points, right? It's not complicated. Want to point out, I'm going to draw this wick to wick. Okay. Sometimes, if you've heard some of my other webinars, when I draw trend lines and things like that, when I check for prior highs and lows, I actually go by the body, not the wick. Because the wick represents levels that were tried but rejected by the markets. The body represents where they found consensus. Okay, so I like consensus for trend lines. But for Fibs, I'm measuring distance, you guys. And when I'm measuring distance, we go tip to tip, wick to wick. And what I'm going to do is I'm going to grab my Fibonacci tool, go up to the top of the wick by point A where the trend began. I'm going to hold the mouse button down. I'm not letting go. And now I'm going to drag it down to the bottom of the wick by point B. And that's where I drop the line. Suddenly these movements don't look so random, do they? I told you guys this would be worth your while. Look at every place we stopped on the way down for a little bit. It was a support level you could have predicted. Look at the resistance here, the bounce down here, here, again here, here. And ultimately, look where we found bottom and where we bounced up to after that bounce. Oh boy, this is exciting. I'm glad I stayed awake. Right? And didn't run off to my weekend too early. It gets better, you guys. You've already seen you can identify support resistance levels, but which support resistance levels are the most important ones? Well, for that, I got to turn my attention to how high we bounced on this rebound. The highest point we reached. In this case, it's 50. And this is a percentage, you guys, 50%. I'm going to drop my label there. We'll call that point C. 2/3 of the way done. What 50% means, if I move this over here, it's telling me we're roughly halfway between A and B. Okay, 50%. That makes sense. A 50% retracement. What you do is you measure A to B, you wait for C to form, and once things start turning back down in the original A to B direction, you can trade C to D with a whole heck of a lot of confidence. Okay, we've got some rules for C to D movement. All right, I'm going to share with you guys the 3 most common ones. These are the ones you're going to see over and over again. Okay, and the ones I think you should start out looking for if you're new to Fibs. If your C retracement goes to 38, your D, 9 out of 10 times, is going to go to 138. If your C goes to 50%, your D more often than not will go to 161. And if your C goes to 61, your D will also go to 161. The time frame array is daily because I wanted to show you guys the whole move, but as you'll see in a minute, the beauty of Fibs is that they are really time frame independent. This will work on all time frames, just like it works on all instruments. I'll show you why it doesn't matter in just a moment. Okay? So a little quiz, you guys, with what you know so far. Where would I expect a bottom for gold? Given the chart, given the retracement. Perfect, Arvind. You've been paying attention, my friend. Beautiful. Yeah, 161. You got it, Chuck. Boom. There's our point D. And when I say Fibs are as easy as A, B, C, D, well, they are. Okay? Literally. Now, we overshot it by a little bit. Granted. Okay? I'll show you why we overshot it in just a moment. It has to do with a longer-term scenario that's unfolding. But really, sometimes you'll give up a little bit off the bottom. Sometimes you'll give up a little bit off the top, you guys, because, frankly, you don't see C in advance. You see C when it reverses and drops down. Right? So logically, you're not going to get the top. You're going to get in after it starts dropping, and you see that it's dropping. But that's okay. Not even measuring from the very top, not even including the wick at the bottom, stopping a little bit before 161, because just like I set my stops a little wide, I set my targets a little shy as well. Makes up for the noise in the markets and the lack of a central exchange. But my goodness, what is that? 1,189 points? I'm not all too miffed about the little bit I missed off the bottom. And like I said, I'll show you how to catch that in some cases as well. The point is, you guys, most of the pips are made in the middle. This is the safe zone. The closer you go to an extreme, the more extreme your chances are of being wrong. Most of the pips lost by traders are lost out at the extremes. Because in the end, if you nail the top and bottom perfectly, how does that affect your bank account? It might impress your friends, but it won't affect your bank account, except in most cases negatively. Go for the meat in the middle. That's where the safe pips are made. It may, and it did. Carlos, good observation. We opened outside and below the prior candle today, and we did go lower. I don't know if you can see it once it comes across the internet and gets resized, but there is a wick that actually, since the open, stabbed down to the 161, found support at the double bottom, and then bounced back up. But you're absolutely right. The open suggested bearish, and guess what I did this morning? I shorted with 161 my target. There's nothing I love better than repeating a trade twice. That makes me happy. How do I know B is not a bottom, Pan? Well, it is a bottom when I see that it bounced. Or do you mean, how do I know that it's not going to bounce again here? Is that what you're asking me? For a double bottom. For that, you got to add some other indicators to help you confirm the Fibonacci signals. Some of my favorites would be ADX, Average Directional Index. It measures the strength of a trend. Okay? If you're wondering, if the trend has enough strength to break through a support or resistance level, why not use a strength indicator? I like to draw a horizontal line I cut off at 30 on my ADX. So if strength is greater than 30, support levels will probably break. Strength less than 30, support resistance levels will probably bounce, which means I'm in a range. Now, RSI is an oscillating indicator. Something you should know about indicators, Kenneperin, there's two types, momentum-based and oscillating indicators. They don't all always work at all times. MACD, for example, is a momentum indicator, Chuck. So it's important to know which group your indicators fall into, and this is where ADX comes in handy. If I'm in a trend and my ADX is greater than 30, a momentum-based indicator, such as like MACD or OSMA, will give me far better signals than an oscillating indicator, such as RSI or stochastics or CCI. But if ADX is below 30, I'm in a range. And what could be better than an oscillating indicator to help me trade the bounces of a range? So it's not so much which indicator is cooler than what other. It's a matter of picking the right indicator for the right situation. I bet that's something nobody's ever told you. Momentum indicators when market's in a trend, oscillating indicators when market's in a range. And ADX, I mean, you can tell visually, gee, it's going down. Gee, it's going sideways. Okay? But ADX kind of takes the guesswork out of it. You know what? It was the same high. Yes? There's a little wick here, and it was the same high. If it wasn't the same high, I would go with the highest of the two, meaning the furthest point reached. It was the same. I just figured with a wick here and bodies here, this one's easier for folks to see. That's why I picked it. Generally not, Pam. Great question. Not in Forex. A lot can happen in 2 days, particularly with a sequester kicking into effect. Nah. I do sometimes with commodities or stock indexes, which I tend to trade on higher time frames, such as the daily, weekly. Might be multi-day trades, but even there, only if no events are happening over the weekend. No Euro group conferences, no G8 meetings, things like that. You know what I mean? But when major stuff is supposed to happen, yeah. There's going to be a gap Monday, and I don't know in which direction, so better safe than sorry. The thing is, even if my D hadn't been reached yet, I can always take some profit and get back in the next day if I'm feeling iffy about the situation. One analysis doesn't equal one trade. You might be a 5-minute trader weaving in and out of this thing several times on the way down. You know, on your 5-minute chart, you'd probably trade from one fib level to another, which brings up an interesting point. I mentioned this being time frame independent. Take a look at this, you guys. I haven't moved my fib. I dropped down to the hourly chart. Look how the candle bodies are sticking here. Look at how when we had congestion on the way down, it was right on a fib. Look at the level of precision here and here. I haven't moved my fib. Let me go down to the 5-minute chart. Look at this, you guys. Look at this. I have not moved my fib. So the question on which time frame, wherever you see a zigzag to draw an ABC, and then zoom in on your favorite time frame, you know, zoom far enough out so you can see the complete picture. What's happening? What's this pair up to? Wherever you see a zigzag, draw a fib. Then zoom in on your favorite time frame, trade from there. That's what I love about it. It doesn't force you to change what you're doing already. As a matter of fact, it plays well with other indicators. So you don't have to change what you've been doing to this point. You can just add another layer of analysis to it. Now check this out, you guys. What if you just look at this zigzag? I mean, isn't there a smaller zigzag here? Sure. Go ahead. Let's draw our fib there. Except let's snap it to the right place. Oh my goodness. Still aiming to the same spot. The labels are a little different in front, but they line up pretty closely. In fact, these areas where they double up are what are called confluence points. Okay, I just call them clusters. It's an easier word to remember. But sure, it's double the support resistance. As long as you validate your fib with snaps, meaning the in-between levels are seeming important, it really doesn't matter whether you draw the short one or the wide one. Okay, the labels will be different in front, but they'll point to the same spot. All right, now let me show you. I mentioned there was a way to predict the ultimate bottom, the wick. In this case, there won't always be. And I mentioned there's a level even more important than the monthly 21. Okay, there we go. I'll make it a little bigger. First of all, let's put our 21 in there. Right, if we're going to talk about it. 21 exponential moving average applied to the close. A lot of people ask me why the 21. There's 21 days in your average trading month. There's 21 hours in your average 24 trading day when the currencies are the most active, adding together the American, European, and Asian sessions. 21 is a Fibonacci number. I could roll off all sorts of reasons, you guys. How about I've tried the 20 and the 22 and this one works better? That's my favorite reason. Am I American? Does that make me a better or worse trader? I'm a naturalized American. I hold a passport. I was born in Russia. Some use 55? Sure, absolutely. Also not a bad one. But much of the news has been the fact that we just closed the monthly candle yesterday, and it closed below the monthly 21 for the first time, you guys. Honestly, in years. So that's what has technical analysts spooked. Look at this. October 2001 was the last time we were below the 21, the monthly 21. So people are wondering, should I sell all the gold I have? That depends. Where was it? It was the first time. There we go. There's the bodies right on your 161 fib. Look at your wick. I don't know if you can see that. That's the trend line from the monthly chart. We hit it bang on. And then came up to close our body above the fib. So that's what markets were doing. They were reacting to a longer-term scenario, which is why it pays for you to pay attention to longer-term scenarios. Okay, I like every month, first of every month, I study my monthly charts. Every Monday morning, I study my weekly charts. Every day, I review my notes from the monthly and weekly, and I study my daily charts. Then and only then do I zoom in on my favorite time frames and start looking for trades. Trades within which scenario? You see what I mean? So, what we've effectively done, and let me tell you why I'm not panicking and running for the hills yet. We broke below the monthly 21, but we bounced off of this monthly trend line. And the monthly ADX, by the way, is under 30. Ding, ding, ding. What's going to happen next now that we bounced up? We came down today for a double bottom. Okay, that was the trade you discussed, Chuck. We found support at the double bottom and we've started moving up off of it. What I expect will happen is we will come up to the monthly 21 next, so there's actually a chance for a little uptrend in the weeks ahead, especially if the sequester makes everybody panic about the future of U.S. economic stability. Right? That'll only help a gold rally. But having done a double bottom bounce at the bottom of the range with ADX under 30, I would expect we will now come up and retest the monthly 21 from underneath as resistance. That's when I'll be paying attention to it. Because if it holds as resistance and comes back down, very likely on the third try, this bottom trend line will break. And then you will see ADX go up above 30 as well. So not yet, maybe soon, but basically in the days ahead, I'm going to be watching this monthly 21, which is at 1609, and this trend line, which is at 1550. I'll be looking for this range to be resolved in the week ahead. And depending on whether it breaks out of the top or out of the bottom, there's my next long-term trend, up or down. Standard settings of 14, correct, Pan. So see, so much for just hindsight. Yeah, I like to share a trade that I just closed. That's fresh in my memory. But now you know what I'll be looking for next week. Couldn't get much more specific than this. Alrighty, let's take a look at a couple others in the minutes we've got left together. Let me clear this stuff off. We'll leave the 21 on there. It's always handy. Let's see, I'll do them in the order they were asked. So, dollar CAD. This one had a very nice move down. Here we've kind of reached and completed a fib. Okay, this is a fib that's done. Notice how we're still ranging between Fibonacci levels. Once a fib's done, we know we're going to come back to our 21. So today was a nice down day. We stopped right at a fib level. If we break this retested as resistance, I'm going to trade this the rest of the way down, either today or first thing Monday. Oh, you're right. Grabbed the wrong one. Thank you for that. This is more like it. There you go. There's the CAD. There's the CAD on Fibs. Something I should talk about, by the way. This is going to retrace back down now. We've completed the 50 to 161 move. This is going to come down now and test 0.295 as support. If this holds as support, there's something called the Fibonacci bonus rounds, you guys. If you go beyond your D target and then retest it from the other side, resistance becomes support. Don't worry, we have what's called bonus rounds. There's a 200% fib. There's a 261. So don't worry, we're covered. It doesn't always happen. Okay? That's why we call them bonus round. But if you break your original D target, manage to close on the other side of it, and then come back and test it from the other side. So hey, we've got our next two trades. We trade from here down to here. Then we see if this is a break or a bounce. If it bounces up, we trade to the 200% fib. If this breaks and becomes your resistance, always wait for a retest from the other side before changing direction. If this retests as resistance, we go down to either our 21 or the 0% fib, whichever comes first. Either way, I'm ready for my next two trades. Trend line was drawn on the bodies. That's correct. Mr. C. How did I get my fib to show both retracements and extensions? Great question, Tim. A lot of people, will talk about my fibs and say I use custom fibs. I really don't. They're pretty standard levels, but that's exactly what I do. I do a little bit of math to make my trading platform show me both the retracements, counting up from 0 this way, and the extensions counting up from 0 this way with one mouse click. It's just a little time saver. And if you visit our FX Knight community forum, I just gave you a direct link. There's a PDF document you can download it that'll show you step by step how to make this modification. It also, Ron Barr, you were asking me, what do we do if it only retraces to 23? Or how about even deeper to 78? Well, those are less common, but you'll find all of the C to D movement rules summarized if you read a little further down in that discussion thread at the same link. Okay, they're all covered, but like I said, start looking for these main three. I haven't read Robert Minor Leonard. Do you think I should? Is it good? I'm always up for good reading recommendations. So Euro USD, you guys, Euro USD has another situation going on. I mean, fibs can be applied to this as well. As you can see, here was our last bounce up, our last resistance, where I believe we're heading next. Okay, fib works really nicely on this, but check this out, you guys. Okay, let me see here. Pencil drawing tool. Oops, black's not going to work, right? There we go. Let's do that. Let me know if this looks familiar to anybody. Head and shoulders, very good. And I don't get you wrong, Leonard, by the way. I'm always open to hearing other people's ideas. That's how I got to be good at this stuff in the first place. Right? Like any athlete or musician or anybody that wants to be successful in any field, it's all about pushing yourself further and further. Head and shoulders. So what you do on a head and shoulders, you guys, me see if I can use a different color here. Okay, let me do blue. I like to connect the necklines, okay, straight across. And then, notice what price does. It breaks below the neckline, it comes back up, tests it as resistance. See that? We don't just break and drop the neckline, we retest it as resistance. The moment it does that, I draw a horizontal line from the bottom of the neckline and another one from the top. Here again, using the wick, right? We're measuring distance. I measure that distance and I roughly double it. And that pretty much lines us up with a prior bottom anyway. You see that? The head and shoulders pattern, the fib, and the prior bottom all kind of end up in the same spot. So that's where I believe Euro's going eventually, but let's see how the sequester affects the dollar side of it come Monday morning. Alrighty, and we've had a request for the GU. This will probably be the last one I can do. And then we'll need to wrap it up. What do you think, you guys? I told you this. Here's GU in its downward spiral. Well, I mean, geez, you tell the world that maybe you were wrong both in your analysis of the cause of the recession and your application of quantitative easing after you've extended it for how many quarters, that may have not been the right approach. Of course, markets are going to feel uncertain. Right? And a lack of confidence in the pound. This was coming. Here's the 161. Where I started getting nervous for the pound was this week. We spent all of this week establishing our 161 fib as resistance. And if you break your original D target and retest it from the other side now as resistance, we're heading where? Down, but how far? 261, very close, Pan. First to the 200. That's the next destination, where the next place we'll find support for the pound. Watch out, obviously, also for the round number, right? 1.50. Lazy traders will put their stops there. Their pending orders there. But ultimate bottom, next one, 49.22. If that breaks, and only if it retests from the other side as resistance, then we go to the 261. And that's Fibonacci in a nutshell, you guys. Pull it up on your favorite currency pairs and time frames. Try it out for yourself. Don't take my word for it. The more you practice it, the better you'll get anyway. Try it out on some of your favorite charts, convince yourself that it works, and start out your Monday mornings doing long-term, monthly, weekly, daily plans first before you jump in and trading. Start trading. And you will see your results will get much, much more consistent. Here's how you can reach me. Here's my Twitter, my Facebook. All right. Obviously, I can't teach you every trading tool I use in one 45-minute webinar. I mentioned Fibs. I mentioned a couple of my favorite indicators for confirming their signals. But if you want to learn the whole workshop, all right, here's a link for you, and I'll paste these into the chat window in just a moment. But here's a link. You can learn my entire trading system, plus get a healthy dose of money management, psychology, risk-reward, probability, everything I feel will give you an edge and that you can start applying as soon as Monday to help improve your trading results. We also offer a live daily coaching program. This is frankly my personal favorite product because I've seen it help so many people. If you found today useful, imagine starting every trading day looking at live charts together, making a daily trading plan together, and then following up at the end of the day to see which of those trades worked out, which didn't, and what we can fine-tune for tomorrow. We do that every single day, twice a day. 10 classes a week, and if you can't make them, we record them so you can watch them at your convenience. And the cool thing is, you don't have to choose between these, by the way, you guys. We record them, Pam. You don't have to choose between these. If you're not sure if my system is right for you, or if maybe my personality as an instructor is not right for you, I get it. I want you to find the best teacher for you. You know, try the workshop first. If you later join the coaching program, purchasers of the workshop get a discounted link. So you'll earn back after a couple months what you spent on the workshop. You see what I mean? You're not double investing. Or vice versa, if you want to go straight to the live coaching, but you're wondering if you're missing something by not doing the workshop first, don't worry. Subscribe for this. We'll throw in the workshops. Okay, so either way, we'll take care of you. And if you're on a budget, or you can't devote the time, we've recently launched what we call our weekly video updates. Okay, here we just mail you the Monday morning recordings. Okay, so it's one session a week, not 10 sessions, and you don't get to ask questions and interact. It's just a recording, but you get your weekly briefing, so you know what scenarios we're looking for in the week ahead. Okay, and regardless, you guys, I'm not here to sell you something. I just want to see you improve. At the very minimum, visit fxknight.com. We've got tons of free resources for you guys, free chat room, free forum, some free training videos you can watch, all sorts of plugins for MetaTrader. Lots of neat stuff. So stop by, say hi, check it out. Okay, you don't have to spend money. The only thing we charge money for is the stuff that costs me time. All right? And sign up for our mailing list, by the way. So the next time we do one of these free webinars, we can send you an invitation. Thank you very much, everyone. Enjoy your weekends, and I wish you guys a profitable week next week.